Hi and welcome to another edition of Weekly Market Report by tradersclub.co.uk. Obviously this is for 3rd of February 2013. As per usual, let's start with our disclaimer. Anything that we discuss here, it's available in the public domain and therefore it should not be considered to be advice for your investment or trading. We are simply sharing the information for the benefit of the club members. Let's look at our report, starting by our view of a couple of equities, and the first one is Facebook. This appears to be forming a breakout out of the stage 1 and formation of the stage 2 uptrend. And as long as we see creation of these higher highs and higher lows, this uptrend could possibly continue. The support on the downside is clearly located here at this horizontal previous high of 28.88, followed by rising 50-period moving average at 28.29. Only the loss of these two support levels will potentially target 26.32, 25.15 levels. Alternatively, if the price spikes higher, these previous highs would be the logical resistances, including 32.51, followed by 33.45, and also this gap area here as well. The next chart that we can look at is Apple computers, and we are seeing the almost a confirmation of this a really bearish head and shoulder pattern. We were looking at this pattern for quite some time. Potential target or a price projections would lead us to believe that this area here between 375 and 425, around 400 level, would be quite acceptable based on the distance of the shoulder to the neckline added at the loss of this neckline would potentially target that. Also, if you remember our previous reports, we were looking at the weekly time frames, and there is a really significant rising trend line going this way as well on weekly and monthly time frames as well. So this should act as a major support. Alternatively, if that's lost, then some of the more aggressive analysts would target the top of the head to the neckline added here, so that will possibly target even lower levels. Stochastics is currently at the oversold level and curling up. The price can very quickly move higher, but obviously there is a number of resistances overhead, including this falling to 20 period moving average at 490.84, followed by this previous neckline, which was a major support, now newly formed resistance at 500, and then obviously this falling trend line here and falling 50 period moving average at 523.50. This is the daily chart of S&P, and I've actually decluttered it completely, and I've just placed a simple 9-period EMA moving average on it, just to smooth out the price. And obviously I've connected a previous highs, creating this rising resistance trend line as well. Purely by looking at this chart, we can see that price action recently respects this 9 EMA as a major support. All of the oscillators and indicators like MACD, RSI, stochastics are at the extremely overbought levels. These are basically a lagging indicators, and we cannot trade based on them. We should not be picking the tops, but it's a red flag for us, and a corrective pullback and controlled pullback would represent excellent buying opportunity for most of the other market participants, and it would provide us with a higher probability long setups. At the same time, I would not be chasing longs at this level as well, because obviously we are quite overextended. The first warning flag for me would be the loss of this rising support of this rising 9 EMA trend line. There is another chart for S&P on a daily time frame as well. It's a little bit more complex. Obviously, we have a couple of support lines. One is dashed, one is full blue, and then obviously a resistance line here as well. We can see a Bollinger Bands as well. The price action is moving higher, but we are coming to another level of potential resistance. And as per last chart as well, all of the indicators are quite overbought. However, this will give us a little bit more data to compare it with as well. Resistance is on the upside. If we break successfully above this 1516 level, could potentially be 1523, 1525, even 1550. Alternatively, if the price action moves lower, the obvious resistance is, obvious support is at 1500, followed by 1483.98, followed by this 1474, 1475 level as well, before we move any lower and attempt to retest this 50 period moving average and also rising trend line as well. This is 1 hourly time frame for those of us who trade intraday. We can obviously see another point of resistance. The price action was actually pulling back quite nicely during most of the part of the last week. However, on Friday we saw that the non-farm payroll numbers release, and that reaction to that was quite significant, and the price pushed higher. In this time frame, obviously, I'm respecting this rising resistance trend line. The candle close above this level could possibly indicate higher prices to come, but I would like to see a full candle closing here. And in that case, we are expecting those 516s, 523s, 1560s, 1523, 1550s as resistance levels. Alternatively, on the way down, the first level of support is clearly located here, which is this previous high and horizontal support at 1509.94, call it 1510, followed by 1505.77, followed by 1502.83, before we move any lower and retest this 1495 level as well, which is quite significant. Our stochastics is at the overbought levels and curling up as well. S&P on 15-minute time frame, even shorter time frame, with a daily pivots plotted here as well. We could see that price action was creating a bull flag consolidation pattern, and then at the point of a numbers release, we saw this huge, massive spike, and then the price action carried on moving higher for the rest of the trading day on Friday. This is also a first trading day of the calendar month as well, so it's actually almost quite expected, because money is returning back to the market, and most of the fund managers are actually putting money back to work. So the levels that I'm expecting here are fairly similar to the ones that we talked about already. 1519 would be R1, 1524.86 would be R2 on the way up. Alternatively, on the way down, 1508. 56. Prior to that, this 1509.94, this is 1510 level, followed by this 1507.89, followed by 1505.96. So there is a number of levels that will act as a support on the way down before we even attempt to reach this 200 period moving average on 15-minute time frame at 1502.15. Encouraging sign is that RSI and stochastics are creating higher lows, which are confirming higher prices as well. Red flag for me is volatility index. Obviously, the S&P was spiking higher, majority of the indices are moving higher, and volatility is pulling back. This is showing complete complacency in the marketplace. Nobody's pricing in any risk. And the price action temporarily lost the major support. This is a really, really long-term monthly and weekly time frame support trend line. And then subsequently we came back up to retest it. Now we are retesting this kind of support again on the way up. 1477, 1443, 1532 would be a logical levels of for resistance. In that case, if we see volatility index spiking higher, it would mean that S&P is selling off. Alternatively, if the price action returns below this 1290 level, it would probably mean that S&P is rallying at that time as well. Red flag is RSI is slightly oversold, MACD is oversold and crossing, and our stochastics actually went into overbought very, very quickly, although the price made just a small move. Something for us to keep an eye on as well. Copper price created this massive breakout outside a really, really long-term consolidation triangle pattern. We found a major support on this rising dotted trend line on daily time frame at 365 level, but this is a clear indication of higher highs, and price actually moved higher without any problems. The fact that we actually closed above this falling resistance trend line, which is now support, could be seen as a bullish development for S&P, because S&P is actually lagging whatever copper does. So next point of resistance is here at 382, followed by 384, and only a spike higher could potentially target 4. Alternatively, if we return lower, obviously this falling previous resistance, now newly formed support at 370 would be a support level, followed by 372, followed by 368. Gold chart, this appears to be a really a long-term bull flag pattern with A, B, C, D, and we are waiting for a breakout on E. Only a swift move higher towards 1695, 1700, and especially the daily close above 1700 towards 1720 would be seen as a potentially bullish development. Recent price action appears to be forming inverse head and shoulders within the bull flag as well, which in itself is actually quite bullish as well, although the price action in past 3 or 4 trading days was quite volatile. We had $20 spikes in and out intraday as well. So price is currently supported by 200 period moving average at 1660. And any further price softening would be supported by 1651, followed by 1636, followed by 1626, and then obviously this falling support trend line. I would be quite wary if I see that. Alternatively, if the price spikes higher, the logical levels of resistance would be here at 1686, which is falling 50 period moving average, followed by this 1695 level, which we tempted 3 or 4 times and we got rejected. So obviously that's a really, really strong resistance here. And then obviously this falling resistance trend line around 1700 level. So something for us to watch. RSI is creating higher highs, same as stochastics as well. MACD is almost in neutral. The price can move either way, but I am slightly sitting on the bullish bias here. This is WTIC or CL contract, NYMEX traded oil. Yet again, breakout above a long-term falling resistance line at 95.50, so as possibly challenging this 97, 98 level, which it actually happened last week, and price is currently consolidating just below that major resistance line and horizontal resistance as well. The next logical level for any further price gains as a resistance would be located here at 142, which is next previous high and a significant high with that. Only if we spike higher, we could potentially target this 106.43 level. I don't see that happening very quickly unless there is some kind of geopolitical risk or something else that we are not aware of. RSI, MACD, stochastics, they're all on overbought levels, so the possible further consolidation is quite likely. Support on the downside, it's located here at 95.34, followed by this falling trend line and 93.66 level, followed by 92.21 and so on. So it's kind of a cluster of this 50 and 200 period moving average crossing over as well. Dollar index, inverse head and shoulders, a really long-term consolidation. This is quite a bearish setup for dollar index. Continuous QE3 would cause US currency to soften as well. And obviously, concerning bit is this major loss of this support trend line on daily time frame. Any further price softening could potentially target 79.01 level, followed by 78.33, followed by 78.60. All of these are logical support levels on the way down. Stochastics is oversold. On the way up, 79.56 would be a resistance level, followed by 78.70. 79.78, followed by this 80 psychological level as well. So a number of levels for us to watch. This was a little bit longer than usual, but we had a lot of charts to go through. Hopefully you enjoyed it, and stay in touch. Thanks.